Welcome, welcome. Godric here, your stock market mentor. Sundays. Back with you guys. I got your back. Welcome, Michael, Isaac. Appreciate you. YRK, welcome. User 677, welcome. My iPhone 884, welcome. Jeremy, Rob. Godric here, your stock market mentor. Sundays. Gonna talk about some stock market stocks. Guys who missed me Monday, last week because of the holiday, I'm back. I'm here. Here to answer your questions, talk about the stock market. I'm showing you the background because this is what happened Friday. It was down pretty bad. This is what can happen with stocks and with any investment. It can go down. So the stock market's going to weed out the weak people, the weak-minded. And what's left is going to be the strong people. People are going to tough it out. They're going to trade that roller coaster, buy the dips, sell the peaks. People that have a strong resolve, I think. Because the market's going to chase out these, I don't know, what do you call them? Shallow, like, people who, lose a few bucks, then they run to their mommies. Am I right? Talking to the real people here tonight. They can take it, lick it, and keep on ticking. And if you have some puts, that's even better because you may have made some money on Friday. We'll talk about some puts today. A trade that can make you money when the market goes down. So technically, we're going to be short on the put. If we buy a put, which is like owning a long put, we're technically short, similar to if you short shares of stock, you're short. The put has a better risk tolerance because on the put, you can only lose what's in the put in case the market swings up, and it might swing up. But with the shares, if you have shares, technically you can lose if it keeps going up. I remember some people were short Tesla back in the day, and Tesla went to $1,300. This is before the split, and some big traders got wiped out because they weren't protected. If you do short shares, you can always protect yourself by buying a higher call. Because if you have a call option, then that's protection because when your short shares go up, you lose money. But if you have that call option, it'll cancel out. For example, let's say you're short 100 NVDA right here at 102, right? Think it's going down. Some people do think it's going down a little more this month because September, like the worst month of the year, right? So you're short NVIDIA. Let's say it pops to 110, 120. Now they're at 20 points. Well, all you have to do is buy a 110, 115, 120 call option, and that'll protect you for 100 shares. And let's say you buy a 120 call, right? And the stock's here at 102. And the stock shoots up. Your short share is going to lose 18 points, right? So that's $1,800 on 100 shares. But if you have a call option of the 120, at that point it matches up with your short shares, and then it gives you like a buffer, and it cancels out after that. So you can only lose up to where your call option is. That's like a protection. So if you do short shares, 100 or more, what you should do is buy a much higher call, depending on how high you think it can go, to protect your risk. That's what I would do. Make sense? 61 people here. Tap that screen. Just tap that screen for me. Give me some hearts. If you tap that screen fast enough, like a video game, the top left will you get like a red bar, and you bust a nut and it just goes like that, and then you get some more people in here. Thank you. I appreciate you. Down the pit. Welcome. Mantis Fang. Welcome. General, hi, welcome. Alexander, Trun, welcome. Appreciate you. Give me some likes, guys. And you know what? If you know how to do it, there's a share at the bottom right. Just give me 2 shares each, and I'll be happy. And talk about some stock market stocks tonight. Godric here, your stock market mentor. I was taking a break on Monday because of the holiday. So I'm back here with you, trying to make it up, trying to get your back. I'm showing you the background here because we were down pretty bad on Friday. So, it could go down further. The Fed chairman is going to talk on, I want to say, the 17th or 18th. That's not tomorrow, not this week, but the following week, 17th or 18th of September. Probably he'll cut the rate by half a point, which is already factored in. That'll probably send the market up a little bit. But here's the thing. Don't get happy because it's September and we kind of had a good run the last, let's say, 12 months, 18 months. So there will be people taking profits when it swings up. So I would be playing both sides. Have some puts, have some calls, and hold on to your best positions. If you're doing cover calls, keep doing that, and don't be afraid to write the lower cover call, no matter what you bought it at, because that is your monthly income. Write those calls every month. And again, it's September, so the Dow's here. Like the Dow's at 40,345, down 400 on Friday. It can easily break down into the 39,000, 38,000. If it does that, your puts are going to come in. I would buy QQQ puts and or SPY puts, SPY. That's what I would do. I'm going to take your questions. You guys have any questions? Let's see. Appreciate you. I am your stock market mentor. You can always DM me. If you want to give me throw me a crane. If you gift, helps motivate me. Appreciate you. And if you give me a sub, it's like only $5 a month. I answer all questions for subs, and I can also advise on a trade. Appreciate the follows. I'm gonna follow everybody back at the end of this stream, so you get a follow if you follow me. I generally come here on Monday nights, talk about stocks, talk about some positions, about where the market's going. I don't have a crystal ball, but it's kind of just mostly experience. I'm just sharing my experience, share my trades. I like to do a lot of cover calls and option trades, and show you how that looks. I might just show my personal account, but I'll show you a trade or two and how that solves to make money. Ideally, make money. Sometimes we miss, but I like to think we hit more than we miss. Welcome, Balak. Appreciate you. Give me some. 458 likes. If you get those likes to 1,000, guys, I appreciate it. Get those likes to 1,000. Let me get some more people in here. And we'll start answering questions. If you guys don't have PLTR yet, take a look at PLTR. It's doing a little bit better. PLTR went to $32. I know it's been there before, but a couple of good things about this one. It's cheap as far as the share price. PLTR, Palantir, and it pays a decent cover call. On Palantir, I'm looking at the stats, and I'm showing a PE now, 178, which is high, but it didn't have a PE for a while, so it's trying to do better. So it may be moving to $35, $40. That's not for sure. It's just heading that way. And if you're doing some cover calls, you're gonna make money regardless. I can do a cover call if you want. We're notifying viewers. Thank you. You guys give me like 2 shares each. Appreciate you. Get some more people in here. Those likes, almost 1,000. Let's break the 1,000 likes. Let's go. Hit that screen. Tap that screen for me. SGN. Is that little calls after chairman speaks? Ralphie, this is what things might happen. When the chairman speaks, let's say on the 17th, 18th, I think the market will like that and it'll pop up. But then what? So many traders, so many big people selling, they're going to come right back down. So use it as a trade. Okay, it's not just going to turn around and shoot up. Everything's going to shoot up, and then we're going to have a Santa Claus rally. I don't think so. I think people are worried about the election, and we already have some pretty high PEs now, so you got to take the good with the bad. SGN, is that a stock, SGN? Let's take a look. I'll look at this stock, and I'll go back to Palantir. Signing Day Sports. Ooh, 12 cents. Ooh, can't do it. I can't do it, man. I can't do penny stocks. Signing Day Sports operates a sports recruitment platform in the United States. The company operates Signing Day Sports, a sports recruitment platform that helps athletes get discovered and recruited by coaches and recruiters for various sports such as football, basketball, softball, etc. Well, it looks like this stock just started in 2023 December, and it's gone down. Started at $5, and now it's 12 cents. So that's what you get for being in a penny stock. Can't do it. I know. There's no PE. I'll just no. There's no nothing. This is a Hail Mary pass. Now it might be a great idea to sign, athletes, and they might be doing a good job, but that doesn't mean it's going to translate into a good stock. I really want a stock to go up, not down, and SGN here. Also, the volume's too small. It's just so tiny. It's like an idea, but it hasn't taken root yet. So I'll wait till this one gets around $50 to $100 share price. It may never do that. And then get in volume. I'd like to see volume of 2 million a day. And I'd like to see either a 5-year or a 10-year chart, which that has neither. I'd like to see a PE, which means they make profit. Doesn't have that. So I can't do it. What other stock you got? Give me something else. Give me something real. Give me a real question. If no question, I'm going to go back to Palantir. Thank you, guys. Give me some more likes. Help me get some people in here. Broke the 1,400 likes. Thank you, guys. All right, so Palantir. Back to Palantir. So Palantir is doing a little better. It's kind of attractive in the way that it's only $32 a share. So you can buy 100 shares for $3,000. And if you look at the 5-year chart, it's kind of looking nice. It's kind of being very steady, and it has a PE now. So if it keeps getting those government contracts, it'll probably do better and go up 40 and 50. But let's look at the cover call. That's what I want to look at. Click on options. Click on strikes all. Let's go to next month, which is October 18th. In September, you write October. In October, you write November. October 18th, 40 days. Here we go. Buy the shares here at $32.71. Let me put my calculator. $100 shares will cost you $3,200. Watch this. Write the cover call for October 18th. We're going to look at the strike. I'm going to go with the 33, which is just above the share price. And it says bid 115 by 123. Check this out. The last is 121. Because of the volume, look at this volume, by the way. Remember that stock SGN only had like 300K volume? This volume is 50 million on Friday. That is major volume. And because it's 50 million on Friday, you see this bid ask here, 115 by 123. You could easily put an order between the bid ask. It'll probably take because of all that volume. Someone will buy that option. So here the last is 121. I'm going to go with the 121, which is the last price. So you write the cover call for a 121 limit order for the 33 strike for October 18th. And watch what we get. 1.21. Follow me on this one. Use your calculators. 1.21 premium per share, which is $121 for 100 shares per $3,000 invested, divided by share price of $32.71, share price Friday, equals 3.7% return. 3.699 is close enough, 3.7. For a month, for 40 days, and what? We write 10 cover calls a year. And okay, 37% return. I told you I had a trade for you guys. Like, are you guys following along? What does Tesla do next week? Tesla. Tesla is going to go up because Elon Musk is about to reveal his robo army in October, and there's going to be a lot of buying before that. Let me pull up Tesla for you. TSLA. Elon's baby. Okay, so it was 211 Friday, down 210 Friday, down 19. Major hit. Started climbing up in after hours, 211. I'm gonna look at I like to look at the 6-month chart. Yeah, I think we're gonna go back to the 260 price. Let's say by next month. Let's say by end of next month, it may be 250, 260. But what I would do, I'll be honest with you, I would sell before that, or I'll use it as a trade, because yes, it is a buy here, probably going higher. Look at this PE. PE for Tesla, 59. That's traditionally for Tesla, it's pretty low for Tesla. Tesla's hot. We got a robo army coming. I can show you the cover call on this one too, but Tesla designs, develops, manufactures, leases, and sells electronic vehicles and energy generation and storage systems in the United States, China, internationally. The company operates 2 segments, automotive and energy generation storage. Did you know that? Automotive segment offers electronic vehicles as well as sells automotive regulatory credits and non-warranty after-sales vehicles, used vehicles, body shop and parts, supercharging, retail merchandise, and vehicle insurance services. The segment also provides sedans and sports utility vehicles through direct and used vehicle sales, a network of Tesla superchargers, and in-app upgrades, purchase financing, and leasing services. Services for electronic vehicles through its company-owned service locations, and Tesla mobile service technicians, and vehicle limited warranties, la 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 la. Okay, volume, 112 million Friday. That's kind of volume I like. Ideally, I don't like it to be that much down, but yes, it's a buying opportunity, down 19. Stock shares at 212. It's been going between 180 to 220, so yeah, it's fine. It's fine. Is it a buy now? Yeah, I think so. So let's say by, not this week, but next week, maybe 220, 230, and then by next month, maybe 240, 250. That's just being really positive. But like I said, when it spikes up 10, up 20, I'd be closing my calls. I'd be closing some trades because I want to trade it, because it's going up like down like a roller coaster. So I think about Tesla. What else you got? Questions? I will follow everybody back when we're done. You guys hearing me? Okay, back to PLTR. Well, let's do, since I'm here on Tesla, let's do the Tesla. Palantir gets a 3.6%. Watch this. You don't get blown away. Options, strikes. So we'll write that same cover call for next month, the 18th, October, 40 days out. Buy the shares here, 210, 211, right? 21 grand, right? Watch this. We're going to give it some share growth. We're going to write the 220. Give it 10 points of share growth. 1425 by 1450. Hello. That's 1425 per share for each cover call. So now remember all the volume, 100 mil, 112 mil. So what you do, you put a limit order between the bid and the ask. So if it's 1425 by 1450, let's say, I'm gonna say we can get 15. I mean, like, put a limit order 15. If it doesn't take, put 1475. But I think 15 will take, which means you'll get $15 per share for holding it for 40 days on a cover call. Agreeing to sell it at 220, which is 10 points higher. Let's do the math. You guys, if you have a financial plan, if you don't have a financial plan, write this down. Again, we're buying 100 shares of Tesla here at 21 grand, right? $15 premium for your cover call, divided by the investment price of 210 211, same difference, equals 7.14% return. Ow! Holy cow. Sell the farm. Sell the farm, dude. Tesla's paying 7% a month. That's 70% a year for 10 cover calls. More if you do 12. What is your financial plan? Are you going to be those old ladies at Walmart when they're 70, checking receipts, working after you retire? Is that your plan? Because this one here, I have a plan for you right here. $1,500. So you put 21 grand in your investment, right? And you get $1,500 back for every, let's say, 40 days. Okay. What can $1,500 pay for? Maybe your rent or your mortgage. Some of you. Buy what? Some Starbucks, some food, some Netflix stream. Have money to take your wife out to dinner. Maybe buy her something. It's a start. Multiply that times 10. So you have 200 grand, 210 grand, 1,000 shares of Tesla, 10 cover calls. Now you got 15,000 a month. Do you see the math? Tell me you see this math. Who am I talking? Am I talking to a blank screen? Bullish Tesla Monday morning, mark my words. Laszlo. Bullish Tesla Monday, mark my words. I think so. We were down 19, and it tends to. I've been watching it. It tends to be up in the morning, at the open. But then what's going to happen, Laszlo? What's going to happen after it swings up in the morning? Let's say it's up 5 points or 7 points. Before lunch, I guarantee you, come right back down. And then what? Buy. And hopefully it goes back up, but it will pop in the morning. So if you have, so I can show you. I'm going to do Tesla. So I can show you a trade. Maybe, let's see. Okay. Here's a call option for November, so you have time. You have time for the stock to mature. Okay. I went 270 because I was looking for a certain price. I was looking for a certain kind of leverage. Okay. 270 call for November is going to be $680. All right. Now, with one call option, you indicate 100 shares. You control 100 shares of Tesla stock. But because the call option is very high above the stock price, you're basically buying smoke, you're buying fluff. So you want to trade this option within 30 days. Because as the stock approaches November, if the stock's not 270, this option is going to go down and probably to zero because it will decay. So this is a good option for like in the morning when you open up in the morning and the market's up and Tesla's up 5 points, 10 points. Buy an option like this for $680, will probably go to 1,000. Probably go to 10 points, which is $1,000. Yeah, 40%, 40% return. And what? Pull the trigger. Because why? Because take small gains and walk away. That's a trade right there. So instead of buying 20 grand and having 100 shares of Tesla, you can buy one call option, November 270, for $700, and you can probably get a good trade out of it. When the market swings up, when Tesla swings up, you can sell. When it dips, like Friday, down 19 points, down 10, down 20, it's the time you buy a call option like this. Or if you want to buy shares, you buy shares. Buy the dip, sell the peak. See, I gave you a trade. You write that down. Now, any questions on that? Tesla call is too high. Tesla ain't finna move like that at the moment, maybe in a year and a half. Okay, Tesla Scarlett, thank you so much for your opinion. You are half correct, okay? What you may not know, my dear, doing options, is I don't really think the stock's going to 270 right away. What I think is this $700 call is going to pop up every day of the week that Tesla pops up. And the $700 call will be $1,000 or $1,200 whenever Tesla moves up 5, 10, 15 points. And that has happened all day last week and the week before. So what? When it swings up, pull the trigger. Buy the option, sell it. You buy the option to trade the option. You don't buy the option to exercise the shares. If you wanted to buy the shares, I would just buy the shares. Or you can buy like a leap, go out like next year, get a better price. Because a trade like this, when you're buying what I call fluff, you gotta pull the trigger when you get a profit. You're not trying to, we're not saying Tesla's gonna go to 270 by November. It might, but probably not. I've been more interested to see where it is next month. So keep an eye on Tesla. Anyways, let's do the math on this cover call, okay? Oh, we did. 7.14%. That is the magical trade today. When the stock dumps or if it goes higher, I notice the option price shoots up. So maybe like an average is more like 5 or 6%, but right now it's paid 7%. That's a great cover call trade, and it's a great time to buy Tesla when it's down, I think. And then here's an option. I'm going to show you something else too, but let me see if there's any more questions. Thank you, Tesla. Thank you, Tressa, for that. Tesla next stop 182. It could be so new. 182. So look at this. So I'm going to show you something. See if I can get this right. Look at this. Now I'm selling the call. Look at this. You can sell a call, which is say you're short, and you can look at that. A couple things. When you sell a call, you're looking for the time decay. So it'll expire worthless, but also you're doing the same kind of trade you will with a call. And when the stock moves in your favor, you can close that position and make money. So see, here's a call. I'm getting back $500 on this trade. If you look here, trade price $523. So I got back $500. Okay. They will hold a maintenance to do this trade. Okay. But when you sell a call, you're getting back $523. And in this case, when this stock goes, when the stock goes, well, this is going to move reverse of the call option. So when the call option goes up, this short call goes down, okay? And when the stock goes down, this one will make me money. This one will make me money because it'll get closer to zero because we sold it. We'll short this. So write down plus buy one call for the 280, and then write down minus sell one call. I'm sorry, I messed up. Put plus one call for the 270 November, and then put minus one call for the 280, which means we're selling the call. It creates a spread, but we still have plenty of play. And when the market swings up, we can sell the call. When the market swings down, we can close our short call. We're playing both sides, and they both will likely hit. You know, we have plenty of time. Just watch Tesla move, and you'll see it could be a good trade. That's another trade I want to show you. Appreciate you. Any more questions? You guys, I want you guys to tap my screen. Give me some likes. I got 1,500. Let's go to 2,000. Get some more people in here. And if you can just click your share button down here, give me share it twice. Like share it twice, each of you. Where do you get some more people in here? Thank you for the likes. Get my likes to 2,000, guys. All right. What do you think is going to happen with Tesla tomorrow after Friday is done? I think it'll be up in the morning. 250 Kimura. I think we're going to go up in the morning, let's say 7 points, then we're going to sell down to +2. Then we're going to probably close at +5, something like that. But more important than that is what's going to happen when the Fed cuts on the 17th, 18th. I think we're going to get a nice boost in the market. However, factored in, right? No big deal. But when it boosts up, go ahead and close your trades. Go ahead and close your positions, because it's not going to keep going up. It's going to sell back down. And Elon's supposed to reveal his Tesla robo army in October, around first week of October. That should give Tesla a boost. But again, trade that also, because that's going to shoot up maybe 10, 20, 30 points. I think it will get back to 250 in Tesla, let's say before Christmas. That's just my guess. But there'll be a lot of roller coaster rides. There'll be a lot of dips like Friday, so get ready for that. And look, if you had a call, even if it was 270, way up there, and when the stock swings up 5, 10 points, that call will be a profit mode. So pull the trigger. And then when the stock dips, you can always buy shares at the dip, but also if you're doing the selling the option, you sell a call, let's say the 280. When stock dips, that call is going to come in the money, closer to the money, and make you money. Let's say you sell it for 523, which is what I sold it for. That brings in 523. That's a 280. And when the stock comes down, that 523 might be like 200 or 100. And then you close the position, you pocket $400. That's how you do it. That's how it's going to look. That's a spread on Tesla. I'll show it to you again. Let's get this right. Phone's a little slow. I was showing you a spread on Tesla. Call option, buy the 280. Sorry, buy the 270, sell the 280. Here is the 280. You see it? It's 552 right now. And when the stock comes down, this will also come down, and we can close out a profit. Here is the long call, the 270 call for 680. This one may go, like I said, to 1,000 to 1,100 when the stock swings up 5, 10 points. It doesn't mean I think Tesla will be 270, but if we can sell if we can close this within the next month, next 30 days, you have a high chance of a successful trade. Here is, I just circled up September 17, 18. That's when Fed chairman is supposed to talk. So write that down in your calendar. I would trade the bump. I think it'll come back down. September is generally a terrible month for stocks. Here is another trade. Here's NVIDIA. Look at this. This is the 140. Is this right? Here's a 135 call for NVIDIA for November. Remember, we don't buy next Friday. We go out like at least a couple months, 2-3 months. 135 call is $1.83. This one's actually down. It's showing a loss, right? Buy it for $3. If NVIDIA can pop up, okay, from 102 to 105, 110, 112, 114, which it may do, let's say the next 30 days, what's going to happen? If it does pop up, this option will go to $2, $3, $4, $5. I'm going to pull the trigger. That's all I'm going to do. I got time. It's a high risk because it's fluff. But just look at the roller coaster ride from NVIDIA in the last 30 days. You'll see it's been up, down, up, down. Similar to what we did with the Tesla. Here's a 140. This one's 142. So this one you can get it for $142. This one you can get it for $183. And look at this. You can sell the 145, right? So you're capping out your gains by selling 145. This one shows a little gain. I sold this one for 180. Looking back at me, I sold for 181. And it's showing a profit of $75 because what? Because Tesla went down. Okay? Now it's 108. I can close it now and gain $75. Okay? But don't worry about the money. Look at this. Look at the leverage. The stock's down 4%. The options down 22%. You divide 22 by 4, it's like 5 times leverage. So you can get 5 times leverage over the stock in an option like this. And remember, we're short this option, so when it goes down, we make money. Here's another one. Selling to 150. It's showing a little gain, $56. But look at the return. Sold it for 140, went down to 186. I can close now if it goes any lower. Pocket a nice little gain. 19% leverage right here in this option. So I just showed you a spread on both NVIDIA and Tesla. I don't think NVIDIA is going on 150 by November. It might, but probably not. But when it swings up, is when you can sell your call. When it dips, is when you can buy back the call you sold. And you're playing both sides, just waiting for it to move. Make sense? Traders, write that down. So for video, we can play by one call for November 15. That goes down by more. Rum, Burgundy, how's it going? Thanks for the question. I'm not sure your plan, but yeah, you can buy a call now. If it goes down, you can buy more, but I'm not saying that it's going to definitely go up and stay up. I think it'll swing up, and that's when you got to sell your call at a profit, and then it'll sell off. Tons of volume on the video. Sell off, and then it'll, when you want to buy or when you want to install your calls, you want to trade it. Any more questions? We talked about a cover call on Palantir. We talked about a cover call on Tesla. Palantir is giving us 3.7%. We should like to do 10 cover calls a year. That's 37%. And that's only $32 stock. So you get in with $3,000. Tesla was giving us 7% on a cover call, 70% a year. And that one's going to cost you $20,000 to get in. That's a cover call trade. And then we talked about 2 option spreads for Tesla and NVIDIA. And above the strike price. And that's more of a risk, but seeing that the stock is shooting up in the morning, and on this roller coaster ride, we can look to get a profit to close it, ideally within the next 30 days, before November, let's say by October. Questions? This kind of like wasn't looking like all month. I don't think it's gonna go much higher. I think we gotta trade this month. We gotta buy the dips and sell whatever you can. Sell the peaks. We can also buy a put on the Qs, QQQ. That'll probably come in. I don't think we hit a bottom yet. So if you look at QQQ, it indicates the top 100 NASDAQ stocks. I like that because it's very predictable. The market's down, the QQQ is going to be down more. On the QQQ, the top 100 stocks, you got like NVIDIA, Apple, Netflix. You got all those technology stocks. You got AMD, Microsoft, all the big ones. They all kind of move together. They're like all brothers. Questions? I'm here to answer questions. If you guys throw me a sub, it's like $5 a month. I will answer all questions for subs first, and I also will advise on a trade if you have a trade. You want to throw me a crane? I got a couple cranes up there as my goal. I won't say no. I like little gifts. Web Terry, welcome. Gurdu, welcome. Qualcause, welcome. Crypto, welcome. Appreciate you. Got likes of 2,000. Thank you guys so much for the likes. If you can give me 2 shares Give me 2 shares. Hit the share button. 2 people each. Get some more people in here. Okay, so we talked about Palantir, which was a cheaper price stock. It has a PE now, so that's amazing. The return on a cover call was 3.7% per month, or for 40 days. And let me read Palantir for you. It's not the most friendly stock. It's going to rely on government contracts. Palantir Technologies builds and deploys software platforms for the intelligence community to assist in counterterrorism investigations and operations in the United States, United Kingdom, and internationally. The company provides Palantir Gotham, a software platform which enables users to identify patterns hidden deep within datasets, ranging from signals, intelligence sources, to reports from confidential informants. Spy stuff, counterterrorism. You're going to need to work for, and it's international, so, that's good, because it's all in the United Kingdom, United States. So I think they're good. I expect them to maintain price around 30 and probably go up. That's what I think. Has a good cover call, so even if you have the shares, you can make money monthly on the cover call. If you think you want me to get the share growth to 40 to 50, if you worry about that, then just keep the shares. Don't do any cover calls. Just keep the shares and hold. I think it's a good price. I think we're going to go higher on that. I think Tesla's going to go higher. I think that's a good value right now. Elon's on point. He's a high priest, wizard. Everybody likes him. Questions? I showed you a couple option trades on NVIDIA, on Tesla, and on Palantir. On Palantir, if you could buy an option on Palantir, it doesn't move like Tesla and NVIDIA. But let me look at Palantir for you. You could buy an option. Let me go to November. Let's see. Go to November. It gives you 9, 10. It gives you 2 months. Okay. November 15th. The 40 call is 75 cents. Okay, so look at the 40 call for November. It gives you 2 months for 75 cents. Why is this a thing? Because for $75, you can have 1 call option for Palantir. 40 strike. And I know that's way above the price, but what are we doing? We're just going to trade it. For the next 30 days, and Palantir is up a point or two, which it does during the weekly trade range. This 75-cent option could be $1, $1.20. And what? Pull the trigger. That's what I'm talking about. You got enough time for the stock to go up, to mature. I mean, if you wanted to be a little more safe, you can go lower. You can go 35. Cost you $163 for the 35. And that one may be a little more successful. It may go to $2, and now you got a 40% profit or a 30% profit. You want to be more safe? Let's go to January next year. You have more time. Call option on Palantir. The 40 for next year is $133, $133. The 35 is $250, $249. And if you buy the money 33, it's $315. I'm thinking about this. Look, this is like a more successful, higher chance of success trade. You go longer, you have more time. You pay more money, but the chance of success is higher, because if you just bought the 33 call for Palantir for January, it cost you $315, $315. But anytime Palantir moves up, this week, next month, this 315 call will go to 350, 375. And you can just sell it, pull the trigger, get a profit. And then what? It's going to probably go back down, dip. You buy it back for 315, sell for 350. This is trading. So instead of, trading the shares, which is actually safer, but less return, you trade the options, which is more risk. But what I say, options are how you control the stock with less money, but more risk reward. Why? Because if you buy this call option for this, even if it's a 33, 40, 35, whatever, as you get towards the expiration, if Palantir is not that price, it will go to zero. So you're risking the whole position. However, Palantir has a nice trading range. So the moment this stock goes up 1, 2, 3 points, this option will be up. And you can just pull the trigger and get a profit. So write down November, 40 call for 75 cents, the 35 call for 130, and write January, the 40 call for 133, and the 35 call for 250, and the 33 call for 315. Those are good. Those are good, I think, for a nice little bump, nice little profit. So now we talked about Palantir, we talked about Tesla. Questions. Don't take advice from this guy who believes in flat earth. Dude, the debate God Zero. Dude, appreciate you. Dude, just do your live and just tell us how it works, man. Just tell us how this thing works. I mean, if you can beat 7% a month, dude, if you cannot be that dude at Walmart who's working there after he retires, I'm happy for you. You can show us how to make more money. If you can show us these option trades, dude, I'll take notes, man. Thank you for your comment. What's your strategy? Big dog, index, ETFs, or individual companies? Rico, what's your strategy? Big dog, index, ETFs, or individual companies? Thank you for the question, Rico. So I'm like a stock market mentor guy. So I trade how to retire in the stock market. The problem with ETFs is that basically, by the way, they take a percentage. Like they take 1% or whatever they take. So you don't get the true return, but you get like an average. So in a way, it's safer. But what I do, I just teach people to buy their own stocks, make their own ETF. Because if you got 10 choice stocks, we call that a core 10. If you can pick 10 stocks you can get behind. Let's say you throw some dividends in there. Pepsi, PEP. McDonald's, MCD. Philip Morris, PM. Starbucks, SBUX, right? Some nice dividend percentages, 3%, 4%, 7%, right? That way it kind of balances your account. Dividend stocks tend to have stocks that have that are consumables tend to have a low beta, meaning they don't move much. Meaning it's going to protect you. It's going to balance your account from all these other technology you have. When the market dumps, the dividend stocks will kind of give you a little cushion. And you get a dividend, so that part's good. And then you make your real money on these other technology stocks. You do cover calls, you do option trades. That's where your real money comes from. And the stocks I pick for those are like NVIDIA, NVDA, Apple, APL, Tesla, TSLA, Palantir, PLTR. You see, I'm just like doing a whole portfolio for you, right? And on these stocks, you're going to do a couple things. You're going to trade the options, 1. You're going to do cover calls, 2. You're going to just hold them for share growth, 3. If they're good stocks, if they have PE, make profit. They have all these criteria, which I teach. I teach volume, have 2 million a day or more volume, have a PE, have a nice chart from a 5-year, 10-year chart going up. People are making money. Trends tend to continue, so you're getting an advantage. You're getting an advantage because you're following an uptrend in the stock. You're going to probably do well. Barring an economical collapse, you'll probably be okay. If you're in Tesla, NVIDIA right now, Apple, and then you can buffer that with some dividend stocks, Starbucks and McDonald's and Coca-Cola and Pepsi and Philip Morris, you'll probably it keep you out of trouble. You can really not lose too much money. If you add in your cover calls every month, and you do 10 cover calls a year, you're gonna make money. I don't see how. I mean, when Twitter stock was going for 10 years or whatever, I wrote like 71 cover calls on Twitter. Got back like triple my money that I invested. Then Elon bought it. So once you hit like that 100% return, it's a cash cow. You can't lose money. Like, I'm showing you a 7% return on Tesla right here, and a 4% return nearly on Palantir. You had margin, that 3.6% will be 4%, a little bit of margin. So after so many cover calls, they'll hit 100%, right? Let's say after 2 years, right? Well, that means that you've gotten all the money back that cost you for your stock, which you hit 100%. So you call that cash cow because you got all your investment back and you're still doing cover calls. There's still money still coming in. On paper, you can't lose because the stock can go down and you still have profit with all those cover calls. So that's what I do. That's my strategy. Big Dog, Rico, thanks for you. Can you explain cover calls for beginners, Rico? All right, Rico, I'm going to do this for you for beginners, and I'm going to start to close because I don't want to go too much over an hour. All right, look, I come back on Mondays. Follow me. Throw me a sub if you want to. Send me a DM if you want to, but I will try to be here Monday nights. I generally go late. And then if it's not Monday, just random days like today, I have some time to get out here, talk to you guys, answer your questions. Okay, a cover call is arguably the best trade you can make in the stock market. Okay, why? Because like an apartment owner owns apartments, real estate, they can rent the rooms. Let's say they have a 10 unit. They can rent the 10 units out for monthly rent and get paid. Okay? Knowing that 10 unit was a bigger investment. And by the way, real estate was kind of like the frontier back in the 60s and the 70s. Because a lot of people made money, in real estate, buying apartment units, renting the rooms out. And those still work today. But the new frontier is stocks. Why? Because look at the billionaires of the world. Elon Musk, 200 billion. Jeff Bezos, 200 billion. They're all in stock market. These guys that do rentals, investment properties, they're way down the list. So the financial frontier has flipped from real estate to stock market. So get ready. If you're doing cover calls, you can write this down. You can get between, let's say, 3 to 5% per month return on your investment. You're doing great. Let's do the video. I'm going to do the video for you, okay? NVDA. The video is wonderful right now. A lot of volume. It's kind of down. Don't worry. It'll go down a little bit more, but it'll pop up. You'll bet my life it'll be popping up. And when it pops up, you can trade it. And you can always trade a cover call. Let me show you the cover call. You asked. NVIDIA Corporation provides graphics and computer and network solutions in the United States, Taiwan, China, Hong Kong. International, right? That's important. GeForce, CPUs, graphic cards, etc. And then what? AI. They have a great AI department. Okay, enough of that. Let's look at that. They have a PE. PE means profit. Do they have PE? Oh, look. PE 48. Market cap, 3 trillion. Was that too big to fail? Yeah. Share price, 102. So 100 shares will cost you $10K, okay? Because they're $102 a share by 100 shares. That's the minimum for a cover call, okay? Another criteria you want is you want your stock to go up over time. Look, if you have a stock going up over time, then investors are happy, they're making money, and look at the video. 5 years ago, pull up the 5-year chart, it was $4. Now it's $100. So basically what, 25-fold return? So $1,000 5 years ago is $25,000 now. That's a great 5-year chart, and that's a great candidate. That's a green light. Now, that's not a cover call. I'm going to show you the cover call. Cover call gives you monthly income. So as the apartment owners can rent their rooms for monthly income, the shareholders buy lots of 100 shares, and then they do cover calls, and they rent their shares out to the public for a monthly income. In this case, we're going to look at a 40-day trade, because in September, we're going to go to October. I can do a 30-day trade, but I'm going to do a 40-day trade because I like to trade on the monthly, October 18th. That's the triple witching. you go to options, you select all, strikes, all, expirations, all. So we know we spent 10 grand on the NVIDIA for 102 right here, buy the market, 100 shares. Then we're going to write the cover call. You put -1 call, sell, and then we're going to go to strike. We got to pick a strike. We agree to sell it for, it's 102. We agree to sell it for 107. Why did I pick that? Because if it's 102 and we sell for 107, that gives us 5 more points of share growth, which could happen, okay, by next month. Maybe not, maybe. I never count that, though. I always look at the premium. To have 100 shares and to agree to sell the call on those shares for 107 strikes is going to pay us what? Look at the option chain. Pull up the option chain, October 18th. 6 by 625. 6 bid, 625 ask. That is such a tight spread. That is so nice. $6. So you're getting $6 per share for all your shares, or $600 for 100 shares with a 10K investment for a 40-day trade, every 40 days. And we do 10 of those a year. And let's do the math. So here's the math, okay? 6 divided by, that's the premium, divided by the cost, 102. I'm going to put the cents in there to be exact. The cents is 49 cents. 102 and 49 cents. 102.49. 6 divided by 102.49. 5.85% return. Let's just say 5.8. Round it down. 5.8% return per month or for 40 days, and then times 10. Do 10 cover calls a year. 58% return a year. That's going to beat the hell out of the market. That's going to beat the hell out of NVIDIA stock, probably. Maybe, maybe not. And you're going to what? If you do it right, you can retire. You can pay all your bills. Retire to the stock market. Let's say you're just doing NVIDIA. You're doing stock. I'm not saying put all NVIDIA. I'm saying put it in different stocks that your average return is 5.8%. Okay? Let's say you wanted to make, I don't know, how much you want to make a month? Someone put a number down. I'll do the math for you. We're at 5.8% return for NVIDIA cover calls. That means we agree to sell the stock if it hits 107 or more, and we're getting $6 for that. That's what the option chain pays us. Option chain is like our paycheck. We just pick which one we want to get paid. How much do I make a month? Someone give me a number. 5K, 10K. We're about to close up, so I'm going to wrap it up right now. 5,500. Power Mill, 5,500. Thank you, sir. So here's the math. Write this down in your journal that you can get back to, okay? So what we do, we take 5,500, which we want to make a month, and then you know we can get 5.8% return on our PLTR, on our NVIDIA, divided by 0.058, which is 5.8%. It's 0.058. That gives us $94,827. With $94,827 multiplied by 0.058, which is 5.8% return a month, or every 40 days. It's $5,500 a month, or every 40 days. Do 10 a year times 10. You got $55K per year, and you can supplement your income. And if you do it right, you can retire in the stock market with 100 grand, dude. I just gave you the golden nugget, bro. Like, it doesn't get better than that. Like, you don't have to worry about working at Walmart when you retire. You don't have to worry about working at McDonald's or sweeping the streets somewhere. The money is right here. And guess what? I've been doing this for, like, I don't know, 20 years. And, I mean, I've been doing it really well for, like, the last 10, 15 years. It doesn't go away. It just gets better. What's the risk? Roke. So here's the risk. First of all, the cover call trade is not really a risk because you're getting paid. And it's like when you rent your rooms, you're getting paid to rent your rooms in your apartment. You rent your stock out. You give away the upside. That's the risk. It's like you lose a potential If stock swings up, in this case, we sold the 107 for $6. We wrote the 107 call for $6 for next month. If the stock swings up past 107, you don't make any money. You just make the 107. So you make 5 more points plus your 6 points. Because stock is 102 plus 5 share growth. And then you cut off at 107. It sells at 107. You get your 6 points premium. That's 11 points. So you make like 10% return, which is great. Okay. But you don't get, if stock goes at 120, 130, 140, you don't get all that. The option buyer who bought the option from you gets all that upside. But here's the thing. The stock's not going to go up every month like that. For sure. It will go up here and there, like every blue moon. It'll shoot up. But guess what? Your cover call will happen every month you do it. They're giving me the puzzle piece. I gotta do the puzzle piece, guys. They think we're zoning out here. Give me the puzzle piece here. They're trying to check me, man. They think I'm an AI robot. Giving you guys these in the golden nuggets. So that's one potential risk because you're going to give away the upside. But here's the thing. I'd rather get consistent money every month, 5% here, every couple months, 5%, 7%. And Palantir is 4%. And give away the potential upside than having to worry about the stock going up or down, which it doesn't always do that. Now, the other risk is if the stock goes down. So if the stock goes down to 10, we buy for 102. Okay, let's say it goes down 10%. Okay, so we're getting 7% a month on NVIDIA and 5% a month on Tesla. After a year, we're going to have either 50% or 70% return on the cover calls. So when the stock goes down 10%, we lose value. Just like if you have an apartment complex, you're renting the rooms. The risk that may go down 10%, may go down 20%, right? No big, because you can still rent the rooms. Same thing here. Your stock can go down from 102 to 90. We're technically going to lose value. Our investment's going to go down because we have those shares, 100 shares, lots of 100 shares. It could go down to 80, 20% return. Gone, right? But we still have the shares. We still do cover calls. It's no big. If we're getting 50% a year or 70% a year and the stock's down 20%, then we're going to make either 30% or 50%. We're still good. That's the risk. And enough cover calls, you add up enough cover calls, you're going to eventually pay for your whole stock after, let's say, 2 or 3 years. And you really get to the point where you can't lose money because of all those premiums you make. Call that the cash cow position. Let's leave on a positive note. That is a cover call trade. Talked about Palantir and NVIDIA and Tesla tonight. Write notes down in your journals. Give me a follow. Give me a sub if you want. Send me a DM. Be back. I think I'll be back tomorrow night, late, and ideally every Monday night. Godric out.